question then, guys. At what point, let's say you start at $1,000, right? At what point would you guys consider upping your lot size per trade? Because it's okay to up your lot sizes.
If I reach like 5,000?
5,000, anybody else?
1,000.
Minus 1,000.
How much did you say?
Every 1,000.
Every 1,000.
Yeah.
Okay,
1,000.
and at every 1,000, how do you raise your lot size?
By like a 0.1. So, there's like.
So if you're using a 0.01 lot size,
For $1,000.
$1,000, you go 0.2.
Yeah.
Okay.
0.5.
Okay. So we have $1,000. We'll just there. We have $1,000. Okay. We say risking 1 to 5%, right? So if we're risking 1% of $1,000, how much is that in a dollar amount?
$10.
Okay, and 5%? Okay, perfect. And then and this is based on a 1 to 3, which means on average, we try to go for 50 pips. That's average, doesn't mean every trade is that, which would mean we would be at 150 pips return, right? If it's 60, we're looking for 180, right? If we're at 70, we're at 210. And the reason why this is important is that we've already determined that if we're risking $10 to $50 per trade, right? Depending on what your pip count is, you can calculate your lot sizes, right? So we know that 0.01 is how much, right? And it goes up accordingly. So 0.02 is 20, 30, 40 equivalent. Just know that when you're calculating it, calculate it as 10 cents, so you're like 0.30. So let's say we're at 70 pips, and we would want to times it by 0.01, 02, 03, 04, 05, 06, depending on what your lot size is, right? So this one would be 0.01, 2, 3, 4, 5, and 6, right? So just to show you what the lot size would look like comparing to what you would do. Oh, I got that wrong. Never mind, see? Attention to detail. Exactly. So it would be 1, 0, 2, 0, 3, 0, 4, 0, 5, 0. Right? So this is how we can determine whatever we're risking to get to where we're going. Right? So the reason why I asked the question also is, at what point would we want to up our lot size, right? So now we're at $2,000, right? And if we're at 2,000, how many people want to risk $100 per trade? Okay. How many people would be okay risking $75? Right? When you're going from 1,000 to 2,000, remember, it doesn't mean that you automatically have to double your winnings, right? You can either take $1,000 and trade it like it's 1,000, or you can take it and trade it like it's $500, guys. You can take this 2,000 and treat it like it's 1,000, right? Do you know why we might suggest that? What does this do in terms of trading?
Lowers your exposure.
Sort of, but there's an actual definite answer to this.
Compound.
No. Gives you more chances to win and lose less money if you're on a losing streak. So if you trade,
It's so cold outside.
so if you
I know
treat
it's
this
gonna
like
be-
$500, you're doubling your amounts. Yes, you're not making as much, but we're all learning at the beginning, right? So you're literally giving yourselves, instead of if you're risking $50 a trade, well, there was a gentleman here who was like, I wanna risk $25,
Alexander,
right?
Yeah.
Nothing wrong with that. You're treating it like $500. You're doubling your losses in order to succeed. So it's gonna take you twice as long to blow your account.
And it depends on the lot size.
But it comes down to what the individual amount you wanna lose. So when we focus on the lot size, guys, we need to focus on how much money are you losing per trade and stay consistent with that, right? We have the 1 to 5 and we say we normally try to go for 50 pips. So obviously it will stay pretty close to what we're trading. But if you're in a Bitcoin trade or a gold trade, you can still lose the same amount of money, even though it's more volatile, by adjusting your lot size, because you know that you're like, okay, I only wanna lose $30. $30 is my max, $50 is my max, right? What I try to tell myself is that, okay, I went from 1,000 to 2,000, let's treat it like I have $1,500. Or if I started off at $1,000 and I treated it like 500, so if I was using like a 0.05 lot size, and I got to a 2,000, now I got $1,000. Then I go to 3,000. Oh, I've got $2,000. Right? That's the way. You don't necessarily have to go from 1,000 to 2,000 to 4,000. You could go, oh, I have 3,000. I'm gonna up it by half whatever my lot size was. So if I'm using a 0.05 here, a 0.1 here, why can't I use like a 0.12 or a 0.13? And then when I get to 4K, why can't I go 0.2? Right?
Like I said, greed always creep in.
But you're also slowly increasing. So you're still increasing the amount of money you're gaining. It's just that if you're losing, you're not gonna lose as much. Because just as much as the greed creeps in, it's when we start losing more money, and as our account gets bigger, like I told you guys.
That's when the greed kicks in. Is when you see the red and you wanna make it back.
Yep.
Mm-hmm.
So you start adding more entries and then it gets worse and worse.
The greed can
Before
kick
you
in
know it,
any
your
time.
account is gone. So.
Yeah.
Just trying to bust a move, bro. That's all we're
It's
trying to do.
it's the hard part
The
about
thing
trading.
is, like, if you're okay with losing, you know, it just
Hey,
matters
never
what
mind.
what you're
Maybe
comfortable with.
because I'm coming from doing option trading and I use $300 $500.
You're never gonna always win anyways.
I lose those kind of money, so it's
Trust me. Okay. No word of a lie. I have shown a couple people this. When I say I lost 50K when Trump put the tariffs in, it's no word of a lie.
Oh, I believe that.
What?
No,
I'm proof.
No, just within that 10%
Just-
swing,
Mhm.
50K. But I made that money back and more. And I wasn't even doing anything. It was literally diversified in ETFs, mutual funds. Right? This was like, it's sitting in a little bit of Google, a little bit of Nvidia, a little bit of Epcor, anything, right? It's literally sitting there and letting the market do its own. If I had the power to manipulate that, I would have lost so much more money, because I would have been like, oh no. The only thing I did, guys, to minimize that loss was I didn't have a lot of capital to buy the downside.
Yeah.
So what I did is I took 2/3 of my account out and I parked it
When it jumped,
when it was dropping.
why?
I pulled it out and parked it. Then when the market stabilized, I put it back exactly into where I was. The reason why is I minimized my loss, but I still put back in at the lower end because I didn't have the capital to reinvest. So I still left 1/3 of my portfolio in the market, but because I didn't know what the market was going to do, my risk management was like, I'm gonna pull it and park it. When we're doing it on our own, guys, we are the bosses of our money. We control what happens. If that account blows, there's nobody to blame but ourselves. You could say, oh, it was a bad trade that Mino put in, oh, it was this, but we say to you guys, we can't guarantee that every trade's gonna win. Right? Like, we preach that, you know? But if you're over leveraging and you're blowing your account, you don't have enough for that next trade, that's on you. And that's the hard part, guys, is that we can sit here and when we're all in the same room, we're like, yeah. But it's totally different when you're sitting alone and you're just making that choice yourself, right? Like, think of all the people who say, oh, I'm gonna go to the gym, the new year starting, my resolutions, I'm gonna lose this and this. They're good for a week and then it slowly dies out. And all the regulars, they don't go to the gym for that month because it's so busy with all these new people and they know within a month, 80% of those people aren't gonna go in there anymore. Trading's no different. When you don't have the mindset, do you wanna be the 10% that succeeds or the 90% that doesn't? And then when you succeed, you wanna continue to succeed. Long term. So when you guys say that, oh, I see this as financial freedom for the future, as long as you can stay disciplined to get to the future, and once you get there, to continue doing. Because it's so easy to be like, why should I do that? So you lost 50 pounds, you know exactly why you lost that 50 pounds, and then you just started eating the pizza, and you start eating the cake, and you start doing all of this, and then you don't even realize you're doing it, and you're like, why did I just put 20 pounds on? Because you're like, well, that was boring, there's no fun in it, right? So you don't do it, but then the fun costs you, right? So that's why I say trading is like I'd say 99% mental.
Absolutely.
Because even the skills you learn are in here, right? So this is why I ask you guys these questions. Because unless you're asked these questions, how are you going to answer them, right? Unless you've been through that situation, you don't know how you're going to deal with it, right? I remember I worked at Epcor, okay? And I messed up running a skid steer. I messed up a job, I was doing some landscaping and it looked crappy, right? Because I made a mistake, I graded it wrong. Go to my boss and I was like, okay, I did this. And he's like, okay, what are you gonna do? So I fixed it, and then I thought I'd get in shit, right? 3 weeks later, they asked me to go build an intersection. And I said, why are you giving me this? And he's like, cause when everything goes great, it's the top of the world. Everyone's like, oh, it's all good. It's when diversity comes, how do you handle that diversity? And when he said, you made a mistake, you told us, you recouped your mistake, now we know how you'll deal with adversity to make it through the long game. So that adversity in trading is going a week of dead trades, right? You know how many people quit trading because they get 2 bad weeks? What's 2 bad weeks for the next 10 years? Right? But it's all in here, guys. That's, at the end of the day, it's like, unless you're strong here, it means nothing, right? And if it takes you 6 months to learn it, or it takes you 3 years to learn it, the time doesn't matter that it takes to learn it, because once you learn it, you got it. Right? We're all different, we all learn at different paces. So yeah, because I know we have beginner people who are learning how to manage it, but I also wanted to make sure you guys know how to manage when you're making money, how to enjoy some of your profit, how to when should I increase my lot size, when should I be risking. So if you started with 1,000 and you made it to 5,000, withdraw $1,000, because then your capital's gone and you're raising it slowly, right? And it's good to slowly raise as you're making money. The other question is, okay, so you have $4,000, okay? At what point would you decrease your lot size if you're on a losing streak?
Say that again?
So you have $4,000 in your account. At what point would you decrease your lot size?
When you get to 3,000.
3,000, anyone else?
when I get to like the previous stage where like I raised my lot size.
So whatever that previous was?
Yeah.
Perfect. Okay, then another question is, you have $1,000 account. You're starting with 1,000, at what point would you decrease your lot size?
I think
You
if
get
I
to
reach
the
$500.
50%.
500, half.
And the reason I ask these questions, guys, is because if you've never asked yourself that and you get to that point, then you don't know.
That's so true.
Right? Because we've asked that question. So now when it comes to that, you're like, oh yeah, I was asked that question. What would I do? We don't want ourselves to get to $500, but if it happens, you know how to. Now you've told yourself out loud what you would do. Right? And that's another form of risk management. Why is that important? Because you decrease your lot size, so you got back up to 1,000. Now you can trade like you used to. Right? So you're minimizing the amount you can lose, so you can still stay in the game to make money. And that's why, to get rich, you need the capital. Unfortunately, it's true. The rich get richer and the poor get poorer. Why? Because they have more capital to burn. We talked about that. People would be okay risking making $3,000 off $100,000 compared to making $15,000. Why? Because $3,000 is still a substantial amount of money. You get 3 good weeks making $3,000. You took $9,000 in a month. Right? Most people are happy to take home $3,000 to $5,000 working full time. Right? The thing is you need that initial capital to get there. Once you have that initial capital, that capital sits there and let it do its work. That's like your employee right there. That's like your manager. That's like, I created my business. I got my thing going. I got that $100K. And I'm making $3,000 to $6,000 a month off of that. That's where I'm like, okay, I don't need to work all those hours, right? I don't need to do that, but you need that capital to get there, and in order to get that capital, we need to learn how to grow our capital, but also how to manage our capital as it's growing, so we're not thinking the wrong way and losing that capital. So yeah.
Come on, guys.